First and foremost, I wish to thank the Institute for organizing this interaction and for giving me this opportunity to interact with you. Also, I want to thank all of you for finding time to join. Sometimes it's very disappointing. You find that the Institute is going to organize the meeting, but you find the attendance is not good. Sometimes we don't like free things. So for those who have find time to join this interaction, I really appreciate your presence. Like what Mr. Katungu earlier on introduced, I am your presenter, Msonda Boniface, then we continue interacting. So it's my prayer and hope that by the end of this interaction, at least you are going to get something. In terms of my presentation, I'll cover 7 areas. I'll start with introduction, then I'll end with conclusion. Examination techniques, like what Mr. Katungu has highlighted, our institute is our caring institute. They have noticed that there are some gaps. So they're trying to say, how can we complement in terms of improving the pass rate? Of course, what has been noted, you may have knowledge, you have studied, but we are missing some tips or techniques. So it's my plan hope as we go through, we are going to ensure that it will be helped. I always comment on this whenever I'm making a presentation. There is misconception outside there. And if you are here, please get from me. Zika is not the one who regulates a pass rate. There's a lot of misconception. Oh, since someone I didn't have to say, no, Zika, since someone had stolen money, so they are trying to recover from us. So that's why they want to ensure that only the 2% will pass. No, that is misconception. Take note. Always the institute is looking forward to see that the pass rate is enhanced. So who is going to determine the pass rate for junior exams? It's us who are here. It's very, very important to have that understanding. The aim of Zika, of course, not just to make everyone to pass. They have to ensure that we train and graduate competent and ethical accountant. So if you are not going to demonstrate that you are competent, then you are not going to graduate. There is no compromise. I know maybe some academic institution, or they may try to compromise, but Zika, their focus is to ensure that when you graduate, you be competent and, of course, ethical accountant. Then, like what Mr. Katungu indicated, I'm sure maybe some of you are tempted in March, or you have tempted several times. Forget about that, is a past. Come with open mind. I can assure you at the end of this presentation, the chances of passing will be very high for you. Just follow what I'll try to advise. Then, of course, it will complement. I'm not saying start studying, no, stop studying. No, you have to continue studying. So forget about the past. I'm sure some of you have even passed some adverse comments about Zika. They are honesty. The problem is maybe between us consultant and you as a student. I'm sure you can see, that's why they have shared. If Zika wants to make you fail, they won't share this pass rate. So if you can see this pass rate, I've only picked for 2 exams, you can see that there is a problem somewhere. Of course, for December, at CA2.1 86, the other one 67. In terms of the lowest, 9%, 5%. The pass rate was 41, DA 21. You can see there. March, the performance even deteriorated because instead of 86, 63, instead of 67, 61, instead of 9%, 8%, instead of 5%, 0. Now, honestly, even if it's Zika wants to make you fail, you attempt 4 questions and you get 0. Then you want to blame Zika. We need to be fair. Again, you can see the pass rate there. Instead of 41, 33, 21, 13.3. So what if you can see here, the performance for March was something else. And what I have noted before I can even go to presentation, it seems as students, we are not giving ourselves enough time to study. We are rushing. You find you can't start like you are going to say, no, I don't encourage you to study 3 months. No. These like March exams, maybe are there to help you. Maybe those who did not do well, or maybe those who entered but they did not write the exam. So you can see from here there's need for us to see how we can work together and how we can increase the percentage. I received a letter from Zika, and according to Zika, I was told to focus on these areas in terms of how to come up with post-acquisition profit and time apportion. If you check last exam for D8, question 1, there was income statement, and the student had a challenge in terms of time apportion. Then also I've been guided that I have to comment on IS1, which is on presentation of financial statement. I've received a number of calls, student asking, we know that IAS1 has been replaced as a new standard. Now, which standard is going to be examined? Is it IAS1 or IFRS 18? So take note, for September, even December, which will be the new exam under the new syllabus, what will be tested is IAS1. IFRS 18, which is a new standard, will be tested next year. So take note of that. So for those who are writing, of course, June, September, December this year, what will be tested is the IAS1. Then cash flow, of course, there are some changes in cash flow also because of IAS1, but what will be tested is the previous IAS7, not the revised one. The revised one will be tested next year. So I thought of making to clarify because most students are worried about what will come. Is it IAS1 or is it IFRS 18? So hope is clear. Then also I've been asked to comment in terms of the procedures or techniques in terms of presentation when you are preparing consolidated financial statement and how to compute goodwill. The exam you are going to write, I don't know if it's about 2 weeks' time, there will be goodwill. Mostly you are like to come, of course, goodwill. So I'll comment on how to compute goodwill so that you are prepared as we be revising. One area also which I was given a task is on revenue from contract with customer. Most students are having challenges. IFRS 15 is highly examined. It came last sitting. Don't say it won't come. No, because they noted that we are still having challenges. So I'll try to demystify the 5 steps which you have to follow before you can recognize the revenue. And also I've included about 2 questions on IFRS 15. Then, of course, also I was guided that I have to talk about some technical standards. So I'll comment like on IS12, which is on taxation, also on financial instrument. These are always there. Then also financial analysis, then also how to compute depreciation when there is a revaluation. What happened if a revaluation was at the beginning, during the year, and at the end? Also time management. That's why you are seeing maybe you are getting 0 or 8 marks because you only maybe going to attempt 2 questions. Now, how can you pass the exam? So exam is how you are going to manage your knowledge within 3 hours. So I'll talk about the time management. Then also the syllabus coverage areas and question, how can you select question? That's what I was guided by the institute. In terms of the format, it's always important. D8 has got 2 sections. Section A, there are 2 questions. They are compulsory. When you say compulsory, you have to answer. Then section B, that's where you choose 2, and each question is 25 marks. What has been noted, you find that a student will answer question 1 on consolidation, then you find question 2 is published, you leave it, not answering, then you answer 3 questions in section B. So when they will be marking, for section A, they will only mark 1 question, then section B, they want to pick 2. So this is very, very important. We have noted most for DA, because maybe you are revising using the CA papers, you only attempt question 1. So the message is, section A, there will be 2 questions. They are compulsory. Please attempt both of them. Then section B, that's where you're supposed to choose 2 out of 3. For CA2.1, it's only question 1, which is compulsory. Of course, it's 40 marks. Now, I have to guide you here. In the past, you find that the entire question will just be on consolidation. Now, what we have noted, a student can pass just on consolidation without knowing other standards. So the way forward, even if the question will be on consolidation, there will be other standards which will be tested, like IFRS 15 resays. Then section B, you have to pick 3 out of 4, and each one is 20 marks. So it's very, very important that you understand the exam format. I examined areas or items based on the guidance which I received. I will simply comment, then I'll spend more time in terms of examples or answering, so that also I can give you time to ask questions. It's an interactive. Of course, group financial statement or consolidation, as I've indicated for CA2.1, always question 1 will be on consolidation. Then, of course, plus other standards. Then for D8, also mostly, question 1 will be on consolidation. So they can bring consolidated financial position, also maybe consolidated income statement. I will go deeper in terms of the key areas. Then also I like to come across what we call published or company. Remember, when we talk about the forms of business, of course, forms of business, we know that we have got what? We have got a sole trader. Then, of course, we have got also partnership. And also, we have got a company. Okay. So, what will be tested here, not sole trader. Sole trader won't be tested, or partnership. Except in case maybe we have got those who are doing graduate in taxation PGT1, then they can bring partnership. But for D8 and CA2.1, there is no sole trader or partnership. What will come is for the company. So what can they ask you to prepare? They may ask you to prepare statement of profit or loss, statement of financial position, and statement of changes in equity. Now, there are 2 ways the exam can come. One, they will give you a trial balance. So when they will give you a trial balance, remember trial balance simply a list of balances. So they have already passed a double entry. So you have just to know this element. Is it income expense you take to profit or loss? Is it asset, liability, and equity you take to financial position? For every entry is half mark. Now, when you go to additional information or adjustment, now it will require you to pass a double entry. If they want to give you a trial balance, they will say redraft. They'll say redraft. They will ask you to what? They will ask you to redraft or re-prepare. Re-prepare or re-prepare. If they don't say re-prepare, or they'll say reinstate. So it means here, they will give you financial statement, which they have already prepared. Then what are they going to ask you? There will be some errors, so you have to redraft. So this one will require you to understand standards and double entry. Personally, this one is the one which is challenging. So that's what we're expecting. So if they will say published came in the exam for the company, they will expect they will give you a trial balance, then you make some adjustment, or redraft or re-prepare, which will require you to understand the double entry. Then they expect they can give you income statement. Income statement only show income and expenses, or financial position, asset, liability, and equity, or statement of changes in equity. So ensure that just attempt 2 questions, then you benefit. Or they will ask you to prepare statement of cash flow. I know IS 7 has been updated, but the new standard will be examined next year. So if they will examine new IAS 7, it's the same standard which we covered even at financial reporting. So when you are preparing statement of cash flow, remember, we want to know the inflow and outflow of what? Cash. So when you are preparing statement of cash flow, there are 3 headings. The first one is operating activities, where to show inflows and outflow from the day-to-day running of the business. The next one is cash flow to do with investing. So when say investing, acquisition and disposal of non-current asset. The last part is financing. Here is about a capital structure. Maybe you got a loan from the bank, or you entered into a finance lease. Those will be under financing. Now, if you check the examiner's comment, they will indicate that student, it seems they They do not understand the format. When you say the format, is where a student will start financing, investing. Of course, it will balance, but that's not the format. So ensure that if cash flow will come, it's a friendly. Ensure that you start with operating, investing, and financing. Now, when you come to operating, there's a misconception. When you come to operating, that's why you can use either direct method, where you simply show cash received from customers, other cash received, payment to the suppliers, payment to employees and on behalf of employees. If it will be not direct, or you'll be required to use indirect method. Now, what's the meaning of indirect method? You are interested with cash, but you start with the profit. Then you are going to make adjustment to the profit with the non-cash flow item. Maybe there was a depreciation impairment. Then after you make those, then you go to the movement in working capital. Of course, IS7 favors indirect method. So assuming the exam you are going to write in June and future exams, they will simply say, prepare statement of cash flow as per IS7. Then you are going to use indirect method because it favors the indirect method. Of course, they may also ask you about advantages and disadvantages. Conceptual framework is one area which is highly examined. You are going to see when I go through what was examined in March and also in December. It came in both D8 and CA2.1. What I have noted, as students, we are rushing just to be answering question published cash flow consolidation. In order for you to pass, you need to be good with both theory and computation. So the exam you are likely to, the exam you are going to write in June or September, you are likely to come across with the conceptual framework. So basically, when you say conceptual framework, this is the document which contains the general theories or principles which we use when we are preparing financial statement. Now, why are we saying IASB? We are referring to the document which was developed by International Accounting Standards Body. I know you may say, me, I'm doing Zika. Why should I talk about IASB? Zika simply adopts the standard which have been developed by IASB. Now, why are we saying 2018, but we're in 2026? That's the last time when this document was revised. So my humble appeal, ensure that you revise the conceptual framework. Now, what are the areas they may test you in the conceptual framework? Of course, they'll say purpose. So when say purpose, why do we have this conceptual framework? Maybe to assist accountant. Now, how are we going to assist them as they will be preparing financial statement? To assist auditors as they expressing the audit opinion. If they won't ask you about a purpose, they may ask you about advantages. What are the good things from their advantage? So let's not confuse purpose and advantages. Okay. If they want to ask in terms of advantage, one, it promotes harmonization in accounting practice. How? Because you are going to get the guidance from the conceptual framework. Or they may ask you disadvantage or limitation. So you are going to see when you come to disadvantage, one of the disadvantage, it has not demonstrated to what extent it has lessened the task of preparing financial statements because it only contains theories. And we have got different users with different needs. So take note, purpose, advantage, disadvantage. Then they may also ask you about chapters, or which may call section. There are 8 chapters. So my humble appeal, ensure to know the 8 chapters. Like the first chapter talks about the objective of general purpose financial reporting. So if they will ask you, define the objective of general purpose financial reporting, define according to chapter 1. So we talk about is to provide useful financial information. Whom are we providing to? Existing and potential investors, lenders, and other creditors to help them to make informed decision. So ensure to revise 8 chapters. This one, you are likely to come across it in the exam you are going to write, whether you're writing in June or you are writing in September, simply future exams. So ensure to know what is the conceptual framework, purpose, advantage, disadvantage, then ensure to know 8 chapters from chapter 1 to chapter 8. Hope the message is clear. Then also, they may test you on ratio computation and analysis. So basically, ratio is about comparing two items. When you compare, then you have to see, is there improvement, is there deterioration, or the performance of position is the same. So you may be asked to compute maybe 8 marks, then also to analyze, and they may ask you to write a report. If they will say write a report, ensure that you write internal memo formatting. At least you have got about 2 marks there. Then what am I advising you? Ensure that under each category of ratios, you know at least 2. From my past interaction, student only knows profitability ratios. So ensure to know a profitability ratio, the working capital ratio, investors ratios, because they may bring a ratio which you are not comfortable. Other areas, IS-32. You are going to see I have picked IS-32 is on presentation of financial instrument. If IS-32 will come presentation, IS-2 is on what? IS-2 is on presentation of financial statement. We present according to substance, meaning what? If it's an asset, present under asset. If it's a liability, you present under liability. That's a message. So which areas I would like to be tested? Compound instrument. We say compound instrument. So when say compound instrument, what I would find when say compound instrument or hybrid instrument is where we have got 2 components. We have got equity and we have got equity and liability. So when you are presenting, what are you supposed to do? You split between equity and liability. So take note of that. So you may be asked on a compound instrument. And what the example of the compound instrument is what we call convertible loan. So convertible loan is where there is a component of equity and liability. So take note of that. When say compound instrument, there is a question which I have prepared for you. If they want to bring a compound instrument, okay, so for that, so they may ask about compound instrument. Example of compound, when say convertible what? Convertible loan. I've picked it, came last sitting in CA2.1. So when say convertible loan is where you may be allowed to convert a loan into shares. So in that case, there are 2 components. What are those? Equity and liability. So what are we supposed to do? We have to separate between equity and liability. So when you separate, then equity, you present under equity, then liability, you present under liability. If they won't ask you about compound instrument, then they will test you on preference shares. Preference, they test you on what? Preference shares. So when say preference shares, we have got 2 types of preference shares. There's what we call redeemable. There's what we call redeemable preference shares. When say redeemable, we present it as a liability. The company has got an obligation to come and redeem, to come and pay back those shares. We are going to say, I think it came in September for CA2.1. So what's the message? When say redeemable, it's a liability. So you treat it the way we treat loans with. Then if it's irredeemable, we treat it as the equity. So take note of that. You treat it as the equity. So we'll talk about that. Okay. Okay. So that's how it will be treated. Then to be treated as the equity. Okay. Then you continue. Okay. Okay, that's about IS-32. The other thing, we ensure to revise this one, you come across, there's what we call effective interest rate, and coupon rate. So when say effective, same as the market rate, which we use when we are discounting and unwinding. Then the coupon rate or agreed rate, we use to determine the annual cash flow. I think there's one example which I will go through. So ensure that you know the meaning of effective interest rate. In the exam, we may come across 2%. So how are we supposed to use in terms of discounting and unwinding? IFRS 9, I examine. It's on financial instrument. So under IFRS 9, what are we expect to be tested under IFRS 9? 1, they may talk about recognition. So be prepared to be tested on recognition. Recognition simply means when are you supposed to record a financial asset or financial liability in a financial position. So it's about recognition. So the guidance is recognized upon being a party to the contract. So in the exam, they will tell you the company got a loan on 1st April. And you are preparing when? December. So in this case, what will happen? When you compute interest, only compute interest from April to December. So they won't ask you a direct question in terms of recognition. So what will come is they will give you a date. So recognize upon being a party to the contract. If they won't ask you about recognition, it's about derecognition. Derecognition in simple terms, when say derecognition, when should you stop showing a financial asset or financial ability in your financial position? When you are no longer part to the contract. What's the meaning? For instance, if it's a liability, when you have settled, when you have paid, then you derecognize. Then if it's a financial asset, the right financial asset is when substantial risks and rewards have been transferred. I'll talk about the issue of recourse and non-recourse. Then the other one is in terms of classification. So ensure that you understand classification when you can classify under fair value through profit or loss, fair value through OCI, and when can you use amortized cost. Then apart from that now is measurement. Measurement in short, how do we attach the monetary value? So initial measurement, and how do we handle transaction cost? So financial reporting, you'll be tested on the recognition, classification, and measurement. But for advanced financial reporting or CA3.1, they may also test you on edge accounting. So you should know what is edge, then also the types of edge, and also impairment. So that's about IFRS 9. It's highly what? Examined. IFRS 15, you are going to, when I go to the examiner, the past papers or from chief examiners, we received a number of comments here. So when you come to IFRS 15, it's 11. IFRS 15, it's 11 from IFRS 15 is 11 from contract with customers. Okay. So IFRS 15 is what? 11 from contracts with customers. 11 from contracts with customers. So how do we account for 11 from contract with customers? You have to follow 5 steps. Step 1, you have to identify the contract or contracts with customer. The meaning may be the contract is to provide goods and also services. Like you buy a vehicle, then also you'll be servicing a vehicle. That's the meaning. After you identify the contract, then you have to identify number 2, you identify separate performance. Performance what? Performance obligation. When say performance obligation, what have you promised a customer? Have you promised that you only deliver a motor vehicle or also you'll be servicing a motor vehicle? This is very, very important. Number 3, after you identify identifies a separate performance obligation, then you have to determine the what? The transaction price. How much are you going to be entitled, which can be fixed or it can be variable. After you determine the transaction price, what are you supposed to do? You allocate. Number 4, you have to allocate. What are we allocating? You allocate now transaction price to separate performance obligation. Then finally, step 5, what are you supposed to do? Recognize. To recognize now is to include recognize when or as you satisfy, you satisfy the performance obligation. So recognize when or as. Now, what's the meaning of this? When you say when, it only happen at a point of time. For instance, when you have delivered a motor vehicle, then you recognize the entire amount. Then when say as is over the period of time, for instance, servicing, maybe you have to service over 3 years, like what came should be last CA3.1. They have paid you for servicing and you service over 3 years. So if you service for 1 year, only recognize even for 1 year. Then the other 11, you have to defer. The other thing which we were tested in CA3.1, CA2.1 is where the time value is material. Time value is material, meaning what? You are going to, you provide a service, then you are not receiving the consideration now. Maybe you receive in 2 years' time or 3 years' time. So what's a guidance? You have to discount, then recognize the discounted amount. So that's a message there. So IFRS 15, you are going to, when I go to examiner's techniques and also chief examiner's report, students were having challenge with IFRS 15. So my humble appeal, ensure that you revise IFRS 15. It can come as a separate question or it can come under published. That's IFRS 13. IFRS 15. Then IFRS 13 is a fair value. So when you say fair value, basically you have to know the meaning of fair value is the price you can receive to sell an asset or pay to transfer a liability. Then ensure that you revise or in terms of the types of market, the active market, the principal market, and the most advantageous. Another topic standard is IFRS 16. It's a new standard. Ensure that you know IFRS 16, which is on leases. So I think I've picked 2 questions. So when you say leases, ensure that you revise the leases. Is one area which is also highly examining. So you have to know how to account for in the books of LSA and also in the books of the LSC. Then IS12 is income taxes. Now, this is one area where students are having challenges. So income taxes, there are 2 types of taxes which we have. IAS, it covers 2. So one, there will be current tax. So when we say current tax, we are referring to the tax you are going to pay or recover in the current period due to trading activity. So what will happen in the exam, I know where there's a confusion is when you follow the principles of IS12 and the rules we are learning in taxation. Under IS12, you are going to estimate the tax at the end. You are going to estimate the tax at the end. So in the exam, they will tell you the estimate is 150, that they will pay 150. So this 150 has not yet been accounted for. So what are you going to do? You take to profit or loss as an expense, then take to financial position as a current liability. Apart from that now, you have to bring now the issue of under or over provision for previous year. So if previous year there was under provision, what are you supposed to do? You increase the expense for the year if that was under provision. If that was over provision, you adjust and you find under or over in the trial balancing. Then there will be deferred tax. My humble appeal, revise deferred tax. Students, it seems we are having challenge with deferred taxing. Now, what is deferred tax? Deferred tax in simple term is a future tax effect. What's the meaning when say future tax effect? You are going to pay or recover tax in future, not now. The tax has risen now, but you pay or recover in future. That's what we call it's a future tax effect. Or you say it's a tax on a what? On a temporary difference. It's a tax on a temporary difference. So now when we say temporary difference is the difference between the accounting base and the tax base. So watch out in the exam. So if it's to summarize here, you may have a carrying amount, or which you may call accounting base. Then you may have what we call tax base. So let's assume I'm assuming it's on the motor vehicle. I'm assuming it's in the motor vehicle. You find the carrying amount. Carrying amount simply cost minus accumulated dip and impairment, or the value for your account. And you find it's 100. Then tax base, or in taxation you may call income tax value, but here we call it tax base, is a value for tax purposes, like a cost minus capital. So you may find the tax base is 80. So now, what is a temporal difference? The temporal difference now, it's a difference between 100 and 8, which is 20. So now when you come to a temporal difference, you can have what we call taxable or deductible. When you say taxable, it means it will give you a deferred tax liability. If it's a deductible, it's a deferred tax asset. Now, this 20 is not a tax. What are you supposed to do? They will give you a rate, a tax rate. Maybe a tax rate is in maybe 30%. So what are you supposed to do to come up with a deferred tax? Now, deferred tax, what are you supposed to do? You have to multiply now a temporal difference times 30%. You have got 6. So what's the message? In the exam, watch out, they may give you a temporal difference 20. Now, mostly in financial reporting, they are friendly. They will tell you taxable or deductible. So 20 is not a tax. To come up with a deferred tax now, you multiply a temporal difference times the tax rate in this case, which is 6. Very, very important. We'll see when we go through one of the questions. Then, in terms of relating to consolidation, there's IFRS 3. IFRS 3 basically is a business combination, how to compute goodwill, you like to come across. Then IFRS 10 is on consolidation. How do we consolidate the parent and subsidiary? We consider to be a single economic entity. Then IFRS 13 is a joint arrangement where the parties involved have got a joint control. Now take note, we have got 2 types of joint arrangement. It can be a joint venture or joint operation. Joint venture is where you are going to form a separate entity. Then how do we account for in the individual accounts? We use IFRS 9. Then when you are consolidating, we use equity accounting. Then joint operation, you may or you may not form a separate entity, and the asset belong to the investors or the joint operators. How do you account for in the individual and separate? Line by line. Or apart from that is the IFRS 12. IFRS 12 just a disclosure. Tell us where you have invested and why you have invested there. In financial reporting, you may not be tested on IFRS 12. If it will come, not more than 5 marks. Why do we disclose? It will help users to make informed decision. IS 27 is how to account for investment in the separate financial statement, where you can use it can be at cost, fair value, or equity accounting. IS 28 is how to account for investment in associate. We use equity accounting. Let me give you a clue. For financial reporting, if there will be 3 companies, the first one will be a parent company. Then the second one is likely to be a subsidiary. Then the last one is an associate. So I don't know why you are even worried. Because you know at question 1, if they will bring 3 companies, the first one will be a parent company, this one will be a subsidiary, this is an associate. It's rare to bring 2 subsidiaries at this level. From the time they introduced CA2.1, only 1 year where they brought 2 subsidiaries. I don't know, maybe that's right. But otherwise, I'm very comfortable. If there will be 2 companies, I've given you a leakage. I don't know if you are looking for the actual paper or what. I've told you the first one is a parent, this one is a subsidiary. And what's a subsidiary is where the parent has got control. Now, how do you consolidate a subsidiary? We use what we call full consolidation. When it's a full consolidation, after adjustment, asset and liability, you simply add it together. Share capital, only pick share capital for the parent. The only time you are going to adjust if there will be what we call share exchange. If the parent acquired shares and they gave out shares and they were not accounted for. Then when you come to reserves, share premium, retained earning, general reserves. After adjustment, for the parent you get 100%, then for the subsidiary you get share of the post. Associate, we use what we call equity accounting or a single line accounting. That's a message. So I've given you a clue there. Take note, parent, subsidiary, associate. So associate, use equity accounting. What's the meaning of equity accounting or single line? In the income statement, there will be only the share of the profit from the associate, share of other components from the associate. When we go to financial position, investment in associate. That's a message. IS 16, whether you like it or not, you come across it, which is on property, plant, and equipment. And they have to advise you in terms of depreciation and also revaluation. When you say depreciation, if it's a straight line, you charge on each year on a cost. Then reducing balance method, first year you charge on cost, then subsequent years you'll be charging on a carrying amount. Now, key area they are testing on IS is revaluation. Now, when you say revaluation, you revalue the asset. You can revalue upward or downward. You may have a revaluation gain or revaluation loss. Now, to know if there is a gain or loss, you compare the carrying amount and revalued amount. Then you have to know, is it a first time? Is it a second time? I'll try to illustrate there. IS 20 is accounting for government grants and disclosure of government assistance. When we say government, we have decided if you are to GRZ. We refer where you are going to get the grant from. We may call them funders or donors. Then you have to know the two types of grant. There's what called grant related to asset, where you're going to acquire an asset, or grant related to income. They may give you grant for operations. So in short, when the question will come in the exam, is it a grant related to asset or is it a grant related to income? Then 28 is a borrowing cost when you borrow for qualifying asset. So in short, to devise when should you commence capitalization, when activities are taking place, when borrowing costs are being incurred and also expenditures being incurred. Then how do we treat the specific borrowing and general borrowing? IS-36 is on impairment. Impairment, we compare the carrying amount and the recoverable amount. When the recoverable amount is lower than the carrying amount, then the asset has been impaired. The meaning here, if the carrying amount is cost minus accumulated dip. If you are carrying the asset at 100, but the recoverable amount is 60, then it means the asset has to be adjusted. Because if you are continuing showing the asset at 100 but you can recover 60, then you are overstating the asset deposition. It will defeat the purpose of preparing financial statement. Now, what is recoverable amount? It's the greater or the higher of value in use and fair value less cost to sell. Instead of only conducting impairment on an individual asset, they can also test on a CGU. CGU is cash generating unit. So if they will bring a CGU, if you be allocating impairment, start with the asset which has been impaired specifically. Then after that, you go to goodwill, then you prorate or you share on the remaining asset. That's very, very important when you say CGU. Now take note, current asset like inventory, receivable, those are not adjusted because are shown at a recoverable amount. That is the 36. I didn't comment on 38. 38 is intangible asset. So just no research cost, we expense. Then development cost, we capitalize after meeting pilot. Probable, when it's probable that there will be info of economic benefit, you have got intention to complete a project. Then instead of saying depreciation, we refer to amortization. IS-40 is investment property. When we say property in accounts, we refer to land and building, where you have it for capital appreciation or rentals to others. The key message, if you are using fair value, there is no depreciation, and if there will be a gain or loss, you take to profit or loss. Then there's also IS-41, which is on agriculture. I think in March it came, I don't know if it's D8 or CA3.1. So in short, we know what is biological asset. It's a living animals or plants. Then also agricultural produce at a point of harvest, what you get from the animal, like you get a milk from the animal, that will be agricultural produce. Then also how to account for grant related to biological asset measured at fair value. The other one which is highly tested is the IS-37. IS-37 covers three things: provision, contingent liability, and contingent asset. So in short, you revise what is provision, contingent liability, and contingent asset. Then IS1, as I've indicated for now, they won't test you on IFRS 18, which is a new standard for those who are writing, in short, up to December. The new standard will be tested, the first one will be March 2027. Then IS2 is on inventory. The key principle, we measure inventory at a lower of cost and neutralizable value. Then we have got IS8, which covers accounting policies, estimate, errors, and prior period error. Then IS10, events after the reporting period. So you have to know, is this adjusting event? If it's adjusting, you have to adjust. Or is it a non-adjusting event? Then you simply disclose. IS21 is the effect of changes in the foreign exchange rate. The way to come at financial reporting is where I've got a foreign transaction. Like maybe Zika can buy a motor vehicle in dollar, or they can maybe get a loan in dollar, but Zika they present in kwacha. So how are we supposed to translate? So in short, to devise monetary item and non-monetary item. 33 is on earnings per share. It's one of the ratios. So you have to know basic earnings per share. We use only the existing shares. Then diluted, we include also dilutive potential shares. IFRS 1 is the first time adoption. If you have been using other standard, then you want to start using international accounting standard. So the advice, you have to prepare yourself. You can't just wake up and say we have adopted. So if they will test you, what are the benefits of start using international accounting standards? IFRS 8 is a non-current asset held for sale and discontinued the operation. So when it's a non-current asset held for sale, initially you acquired the asset to be using in the business. Then you have decided that you are selling. So in turn, when you say car for sale, house for sale, use IFRS 15. So ensure to revise the condition which must be there for you to classify the asset as held for sale. The key message: when you classify asset as held for sale, you stop depreciating. There's no depreciation. Then you present under current asset. The area under IFRS 5 which is neglected is discontinued operation. So take note, IFRS 5 covers what? Two areas: non-current asset held for sale, and also discontinued operation. So in the discontinued operation, it's a component or part of the business which has been disposed or has been classified as held for sale, and must be present a separate major line of the business or geographical area of operation. So kindly ensure to revise discontinued operation. So these are the key areas you are likely to meet vis-a-vis in the exam. Of course, you'll be given an opportunity for our time when we are going to interact. I know I may be a bit fast because it's just an overview and to give you the key areas. Examination techniques, there are those before, during, and after, during, then just before, and during the exam. Before the exam, this is the area. Honestly, someone got 0. Are you going to accuse Zika? The answer is simple and straightforward. Someone didn't cover the syllabus. You can't get 0. So we are rushing to enter for exams. That's a problem. That's why personally, when a student calls me, I don't offer for 3 months. You can't pass within 3 months. You need adequate preparation. So the message, you are not the examiner. So you don't know what will come. So the only way you are going to know what will come, cover the entire syllabus. That's why there's a syllabus. Also, I will also share the examinable areas. I will share with the secretariat. They will share with you standards. So ensure that you cover all the areas. Then chief examiner's reports. I don't know why students, they don't read chief examiner's report. Please, if you fail the exam, doesn't mean you are down or what. It only means that maybe what came in the exam, you did not understand them. Now, when you go to chief examiner's report, I've got all the chief examiner's reports. And if you want to prepare maybe a question, I'll go to the same question and prepare. So chief examiner's report, it's very, very important. So what I would recommend you, like the exam which you wrote, print a question and answer, attempt, then go to the chief examiner's report. They are going to speak to you which mistakes you or your friends made so that you won't make the same exam. So my humble appeal, can you ensure to download at least 4 chief examiner's report, 4 past papers, whether you like it or not, you are going to manage it. Then of course, we have to be practicing past exam questions. Why? So that you know the way the question comes. Not to go to the exam, you have never even attempted any questions. Apart from that, I always encourage, ensure that you have got what? You form some groups, study groups. This time is physical, you can even do virtual. This time, just arrange it. Why? To uplift each other. So if you have not yet joined any group, please join a group so that we can help each other. Then have interest. Some of you, as if they forced you to do Zika. I don't know who forced you. Develop interest. If you have got interest, no one should be even pushing you. Then you are going to appreciate. So that is the message there. Just before the exam, let's ensure that you don't overstudy a night before. You need to have energy to come and use. Then ensure that you arrive in good time. Zambia University College of Technology is an exam center. Sometimes I see students come rushing, learning. Automatically is one sign that you are going to fail the exam. Then also docket. Thank God that is now there is no load shedding. You find students who come now, no, I didn't print a docket. These are simple guidance we give you, which can cost you. Then also be prepared that in the exam, what they can test you any part of the questions. Okay, so let's ensure that we understand that one. During the exam, allocate 1 minute, 1.8 minutes. So the question, for those who are doing CA, Normally, that's why there is a temptation. Student to spend 2 hours. So since it's 40 marks, we multiply 40 marks times 1.8. So question 2, for those who are doing CA2.1, should not spend more than 72 minutes. Otherwise, you will regret. Then they will give you 15 minutes. Now, there's some misconception with some exam center. 15 minutes, you are allowed to write in the question paper. Where you are not allowed is in the answer sheet. So you can just you put something. So use that 15 minutes, use to read the question carefully and decide which question immediately. Say, oh, I'll start with question 3, question 4. Also have to highlight. When you are answering exam, it's not necessarily the first page there should be question 1. First page you can write question 5. The key thing, write question 5. The marker will know that this is question 5. Start with the question which is friendly so that you can have that confidence. This is very, very important. Then in short, the number of questions. Are you going to answer 4 questions or 3 questions? Very, very important. Which one are compulsory and which one are mandatory? Then avoid any professional comments. I always comment this. Sometimes you come across some comment you just have. No, I didn't prepare myself for this exam. No, I had a funeral. Those, just forget about those. I know we want to bring God in the exam. Let God rest. So my message, avoid those unnecessary comments. We just waste time. Okay. During the exam, please ensure to cover all areas. What I have noted, students are only answering the computation. You find the consolidation to be 35 marks, then 5 marks theory, student won't answer. Then ensure you write, show the workings. The mark won't be there for you. That's it there. Okay, I'll simply comment. I know this one was posted some time back. Some of you haven't even gone through it. But me, I'm not a student. I've gone through it, and it is helping me when I'm delivering. So what am I encouraging you? I'll simply highlight this one. You go on the Zika website. Just say, Chief Examiner's Report CA2.1 December. It will come. It's not those days where you have to start looking for something. So what am I preaching to you? Ensure to download this. Can you imagine? Question 1, this was CA2.1 December 2025. They brought statement of profit or loss and statement of financial position. Then someone got 0. I've told if you want to just pick the all figures for the parent, share capital, without even an adjustment. Now, you imagine someone getting 0. Hope the message is clear. Then what were some of the issues? Most students were able to maximize on the marks that are his marks. So the meaning you get a figure for the parent, subsidiary, you add those. Associate, you should not add, use equity accounting. Challenges, percentage of interest. The meaning here, it's like this. We have got maybe poor. We have got poor, okay, like this. Then you have got so, like this. Then you have got an apostle. The examiners are very, very friendly. Okay, so the meaning you find, P is a parent, S is a subject, A is an associate. So let me give an example. You have got, let me talk about what came with income. So there was revenue here, maybe 150, then the revenue here, 100, then the revenue here is 60. Then you find that the parent acquired 75% of shares in subsidiary. So the way we treat, when we say group, we are talking about the parent and subsidiary. We treat it as a what? Single economic what? Entity. Meaning what? The parent and subsidiary is one. So how do we handle that? First, you have to eliminate intra-group item, the income and expense within the group. Then, when it comes to consolidation, if we add the subset for 12 months, what are you going to do? When you come to consolidation, you do like this. When you come here, so you open brackets, you do like this, then you pick 150. Then you add, you should not multiply by 75%, you add 100. So if it was 6 months, you time a portion, you should not add apostle, because apostle will be and associate will be equity accounting. So that's how we consolidate. Just the way I've done here, you have got 1 mark. If there was a time or portion, you have got 1.5 mark. So the meaning here, when the examiner said applying a percentage, where a student will come and say 150 plus 75% of 100. Please, there is no such type of code. We use what we call full consolidation. So that's a meaning here, what the marker meant there. Then also use long number of months, like the exam. If it's 9 months, only get 9 months. So if it was 9 months, you say 150 plus 100 times 9 over 12. So if you maybe you what? You write 8 instead of 9, then you lose the marks. So that's a message there. The non-computation of unrealized profit. The exam you are going to write, there will be unrealized profit unless otherwise. So unrealized profit is a profit going to arise because of intra-group trading. That's what we call unrealized profit. Of course, we can also have unrealized losses, although it has been one. So when you say unrealized profit, it's possible that the parent sold to the subsidiary or subsidiary sold to the parent. In the individual, they accounted for it as a profit. But the parent and subsidiary, it's one. So when you come to unrealized profit in simple terms, this profit was not realized, was not earned. So we compute on unsold inventory. So they will tell you, and the sales were 50 and sold was 25. Then those unsold inventory will be at what? Will be at selling price from point of view as a seller. So since it will be at selling price, what are we supposed to do? If they will give you margin is a profit on selling price, you simply multiply directly. If it's a markup is a profit on cost, you change from markup to margin. And how do we change? We are going to see if it's, let's assume the markup is 20%, the margin will be 20 over 120. So the message, compute unrealized profit in respect of unsold inventory, then those unsold inventory will be at selling price. If they'll give you margin, you change to, if they'll give you margin, you multiply direct. If it's a markup, you change a markup to margin. Then when you compute unrealized profit, in the income statement, we are going to add to the cost of sales so that it will reduce the profit. Then when you go to financial position, you are going to credit inventory, reduce the inventory, then also debit the retained earning of a selling company. So if it's a parent who sold, reducing the books of the parent. If it's a subsidiary, reducing the selling price. That's the mean. So here we are told you are reminded, compute on the remaining, and you always compute in the in the remaining, and we compute in the books of the selling company here. That's the meaning here. Most guardians failed to collect account for deferred tax liability. So the meaning here, in the subsidiary, there was a deferred tax liability which was not recognized, which we are now supposed to recognize at the time of consolidation. Then also, cancellation was made of dividends received by the parent. Any income within the group supposed to be cancelled. When you go, we are continuing with the question 1. The issue which was there was the failed to appreciate the training cost did not qualify as intangible asset. I gave you a friendly advice. In the past, you find that the entire question 1 for CA2.1 for 10 marks was just on consolidation. Now, what they are doing now, they are including other standard. So in this question, there was a training cost which was capitalized. Now, you know, according to CA2.1&DA8, you are not allowed to capitalize training costs because you have got no control. So what we are supposed here is to eliminate it. Now, most students forgot about that. Then the other one, there was a share exchange, which were number of shares as a nominal value was supposed to go to the share capital and to the share premium. Then also, in the income statement, you have to come up with the profitable to the non-controlling interest. In the future, they are telling you, start and practice. Like what Mr. Katungu advised. We are not saying after attending this exam techniques, that's now just sleeping, so understood as we to come. No, I've simply come to work together with you. How can I complement what you have done? Continue studying and going through past papers. Okay. Question 2 was published. The lowest got 0. I've already told you they brought a trial balance honestly. In a trial balance, where income and expense, what were you supposed to do? Simply take to income statement. Each entry, half mark. There will be asset, liability, and equity. You take to where? Financial position. So honestly, how can you get 0? It's just because maybe you are not practicing. That's the meaning here. Then apart from that, this question, take note, there is a misconception. Published or company, it involves other standards. That's why you can't start, before you have covered the other standard, to start with published. No. So if you check, there was IFRS 15 revenue from contract, there was leases, there was also leases, I think reputation, there was IS 32, which is a precision financial instrument, there was IS 12 taxation. So you have to know those standards. So now what was the issue here? Failure to adjust revenue figure from credit sales whose payment was received in 2 years' time. So the meaning here, they were told that they are going to receive 250 in 2 years' time. So when you compare now and 2 years, the time value is immaterial. So what was expected is to discount it. After discounting, then you recognize the discounted amount. Then thereafter, you start charging interest. So in the exam you are going to write, once they will tell you they will receive in more than 1 year, then they will give you effective interest rate. So in this case, what are you supposed to do? You discount. That's what was tested. Then you start charging interest. Then the issue of revaluation. Revaluation can happen at the beginning, during the year, or at the year end. So if the revaluation will happen at the end, like let's assume we are preparing in December. So from January to December, depreciate based on a carrying amount or historical cost. Then you conduct the revaluation at the year end. And the same figure is what will appear in a financial position. So what am I advising you? Answer one question, where they divide at the beginning, where they divide during the year, and at the year end. Compound instrument, I talked about IS-32. Whenever you come across a compound, same as convertible loan, you were supposed to split between equity and liability, but most students, they did not split. Then I talked about IS-12. Most of them, they did not account for under provision. So where they forgot for the previous year. So that's about that. Then there was a rights issue. So students had the chance to know how much got the share capital and how much got the share premium. What goes to the share capital is the number of shares times the nominal value. Then the excess goes to the share premium. Another one, this is also a common mistake, picking the wrong figures from the trial balance. If you are writing the exam, buy please ruler. Why? I have noted you find instead of revenue, pick the figure for cost of sales. You pick revenue, you pick the other thing. So please, you lose out the marks. So relax in the exam. Question 3, they brought cash flow. And when you come to cash flow, they are again getting zero in cash flow honorable members. Cash flow, I said, there will be profit before tax. There will be issue of inventory receivable. The answer here is we are not practicing questions. What were some of the common mistakes? Miscalculation of cash spent on acquisition of PPE. If cash flow will come, you'll be required to open a working for property, plant, and equipment. Then you enter all those entries, then the balancing figure is what they spent to acquire PPE. And why was it wrong? Student failed to include a revaluation loss. So you were supposed to credit the PPE. Then the balancing figure is what they spent. The next one, failure to account for income tax. Take note, you are going to open a working for taxation where you need to combine both current tax and deferred tax. Also, failure to compute dividends. Take note at this level, it's not always they will give you dividend. You have to open a working for retained earning. And the balance figure will be a dividend. In the future, it's you they're talking to now. You are advised to grasp the basic principles and the workings and attempt the cash flow practice. Question 1, this was question 4. What tested IFRS 9, which is on financial instrument, provision, and also non-current asset held for sale. Again, lowest got 0. Then you say it's Zika. Then the pass rate was 4.8. Now you can get here. So if the examiner will bring a question again, the same IFRS 9, are you going to complain? No, what to see? So from here, I can give you a strong signal. These are the areas where students are having challenges. IFRS 9, financial instrument, provision, IFRS 5. Because there the pass rate was 4.8 and the highest got 10 out of 20. What were some of the mistakes? Application of standards. Student, you are not studying standards. Remember, there is the word knowledge level, where normally we say the verb is define, identify, list. Application, we need you to apply the standard. So most students are not studying the standard. Then you are going to see other issues which also were highlighted is when you come to transaction cost. You find instead of adding, they subtracted. Then also in terms of financial ability, we are going to see when you are using amortized cost, we deduct or we debit, not add. So take note of that. So most students failed to account for that appropriately. Then also the issue of accounting for non-current asset held for sale. So there was a scenario, so we expect you to go through there. Question 5, it was on the conceptual framework. I told you this came in December. Check match last sitting. In D8, CA2.1, it was there. Then you, ancestral spirit will mislead you, say, no, it won't come. So I don't know if you listen to ancestral spirit, we are going to listen what I'm advising. So what's the message? Revise a conceptual framework. As you can see, someone imagine got 0. What were the common mistakes? This failure to discuss the nature and the purpose. Remember I told you, they can test you purpose. So they asked purpose, students were answering advantage. Then also qualitative characteristics. Attributes, this is chapter 2 of the conceptual framework. This, ensure to revise there are 2 fundamental qualitative, faithful representation and relevance. Of course, also we have got enhancing. Also, they tested on measurement. So student failed to demonstrate that one. What have we been advised? Study the entire syllabus. Include the theory part, not only computation. Hope the message is clear. Finally, we go to question 1. This is now for D8 for December. Have you seen again someone on consolidation got 0? Why someone got 0? What were some of the common mistakes? 1, we are adding an realized profit to inventory instead of subtracting. So if there will be an realized profit, so what came here was a financial position. We do not add it to inventory. We credit and debit retained earning. Then the other one which was tested here is failure to duplicate the figures that did not require any amendment. The meaning here, they have given you 150 and simply add. If there will be another adjustment, it will bring another entry. Now, can you imagine what about they will give you income and expenses, asset and liability, where you're supposed just to add? Because I've told you the first one will be a parent, this one will be a subsidiary. So this is what we're talking about in terms of exam techniques. That's very, very important. Question 2, it was also unpublished. There was profit or loss, statement of and cash flow. What were some, again, have you seen? Someone in CA2.1 got 0 unpublished. Again, here someone got 0. And I've told you, they challenge you, we're not having enough time to understand. Just know, income and expense will be in profit or loss, and each entry, there will be half mark. There will be revenue, there will be cost of sales, there will be admin, there will be distribution. You take in profit or loss. In financial position, there will be assets and liability. Then also here, under IFRS 15, adjustment for the sale of service. So here is where they sold 2 items, the asset and the service. Then the service was supposed to be provided over the period of time. So the message here, for the time they had not yet provided the service, they were supposed to defer that income, show it as a liability. So again, you are guided here, ensure to capitalize on workings. This is a variable you go through. I wanted just to try to highlight. Also, what came here is 36. Now we can see impairment, financial instrument, IS10, which is the events after reporting period, IS21 foreign, and someone got 0. The pass rate was 6%. So you can see financial instrument seems still giving us tough time. What were the weaknesses? In a bid for some students to clear distinction between the recoverable amount and carrying amount. Remember impairment? When you say impairment, you compare carrying amount and the recoverable amount. So carrying amount simply cost minus accumulated. The recoverable amount, you get the greater of the I of value in use and fair versus cost to sell. The other one, failure to separate. IS32. IS32, if it will come, it's there is equity and liability. What are you supposed to do? You split and you present accordingly. Then also there was IS21. Student failed to define a monetary item and non-monetary item. Question 4. Question 4 was on ratios. At least we can see the lowest also got 0. So it means someone failed even to write a formula like gross profit and return on capital employed. What are some of the challenges? It's about interpretation. We know how to compute, but how to interpret. Question 5. Have you seen conceptual framework? Conceptual framework came, and also adoption of IPSAS. Now we are talking about IPSAS. That's what came there. What were some of the challenges? Student again, fail to explain qualitative characteristics. I think this one we came across also in the CA2.1. So what is the message here? You should know the conceptual framework in there. Okay, those were just comments as I've indicated. If you check, just Google what? Chief Examiner's Report, maybe DA December 2025, it will come. So what am I encouraging you? Go through, we can interact. Now, what are some of the common challenges we have noted when you are preparing published or consolidation? One, as I've indicated, they will give you a trial balance or you have to redraft it. Trial balance, those entry, if it's income expense, we take to profit or loss. Asset liability, financial position. Redrafting or reinstating is where they will give you financial statement already prepared. Then there will be some errors which you have to adjust. So each entry is half mark. If you compute, then there will be 2 marks, double entry. Then the issue of taxation will come. They will give you estimate at a year end. They say 20 kwacha. You take in profit or loss as an expense, then take it as a liability. Of course, it can happen also where you're expecting to get a refund to go as income and an asset. Then in the trial balance, if it will be on the debit side, then it means last year that was under provision. So you add for the current year. If it will be on the credit side, it means last year that was over provision. So you reduce expense for the year. Then remember I talked about the coupon rate and effective interest rate. When you are discounting and also unwinding, use the effective. Then coupon rate used to determine the annual cash flow and we charge on the principal amount. Another mistake, if they will give you a trial balance, there will be depreciation in the trial balance. That depreciation will be for the past years. So what are you supposed to do? You have to compute the depreciation for the year, whether using a straight line or reducing balance. Then what you compute, you take as an expense in profit or loss, then you go and adjust in the financial position. Bank. There will be a bank in the exam. So if the bank will be on the debit side, it means it's an asset. You present under current asset. If it will be on the credit side, they won't tell you bank overdraft because everyone will get it. They will just say bank. And you want to relax it, you take it under asset. What DKJMI giving you, if published, will come, whether D8 or CA2.1, they'll give you a trial balance, there will be a bank. But watch out. If it will be on debit side, take it under current asset. If it will be on credit side, take it under current liability. This is very, very important. Then retained earning normally has got a credit balance, but it happened in March 2022, the balance was debit. So it means they have got accumulated losses. Take note of that. Then of course, the other thing we are advising you, they may ask to prepare income statement, statement of changes in equity and financial position. We use what we call follow-through principle. The example, if depreciation was wrong, then you use the same figure to compute a carrying amount, you'll be given a mark. So the message ensure that you attempt. Normally, don't misquote me, every entry is half mark. I've told you there will be revenue. Write revenue without adjustment, half mark. Cost of sales, half mark. Distribution, half mark. If there will be adjustment, it will bring another entry. Now the problem, we want to balance. You are not the one who's going to prepare the question. So don't aim to balance. Aim for correct entry. We advise, then also say, no, me, I want to balance. Hope the message is clear there. When you come to consolidation, it's the same issue. We compute analyze profit in respect of unsold. If they will give you markup, you change to margin. Then when you come to goodwill, you are going to see there are 2 methods of valuing NCI. There's an example I've given. When you use a fair value, it means the goodwill computes for both parent and NCI. If you use a proportionate, only for the parent. Then remember, subsidiary, like the example I've told you, the first company will be a parent company. Pick all those figures after cancelling intergroup balances. Then S will be a subsidiary. So use a full consolidation. No need of start multiplying by 75% or 80%, just add. Then, of course, when you go to equity, share capital you get for the parent. Then for reserves, you get a share of the post. Associate. At financial reporting, it's that they will bring 2 subsidiaries. So the company should be at the end here. It will be an associate. Use equity accounting or just a share of the profit from the associate. Then according to IFRS 3, which is on business combination, if there will be transaction cost, it should not be part of the cost of investment. You have to expense in profit or loss or through retained earning. Group structure. Write a group structure. Like this came in the examiner. Those who did not write a group structure, they lost 2 marks. So write the percentage, 75%, 2 years ago, then you write also the percentage of non-controlling interest. Share capital, no matter how the question will be complicated, pick a share capital for the parent. The only time you are going to adjust if there will be a share exchange and it was not recorded. Asset and liability, please, we do not time apportion. The meaning a subsidy was for 9 months. Then you go to financial position, you find it's going to be saying PPE 9/12. Liability 9/12. No, please. Remember, we are preparing as at. The issue of time apportion will come to income statement because we assume income and expenses accrued evenly. NCI, this I can tell you, there will be not on NCI. Why? Because there are 2 methods. So they will tell you whether you are using a proportionate or you are using fair value. Then also you have to know how to come up with the profit or loss attributable to the non-controlling interest and the NCI which will show in the financial position. Okay, so we go now to the questions. So yet to be more interactive. So I want you to be discussing now. So maybe I may not set your hand is up. You simply unmute. If your friend is contributing, then you simply unmute. So we'll go through. I think I've picked about 10 questions. We'll be a bit fast. We are going to interact. This one, when say an extract, it's not the full question. I simply picked. So this came in CA2.1, September 2025. It was question 1B. Always start with the requirement like the way I have advised here. When you're answering a question here, like the way I've advised here, what are you advised when you're answering a question? When you're answering a question, always start with the requirement. When you go to the requirement, and as you go to the requirement, what should you take into account? No, what is going to guide you to answer a question? Is it a conceptual framework? Is it IS-12? Is it code of ethics? Very, very important. Then know the period. Are we preparing for 6 months income statement or for 1 year? Or is it as at? Then know the verb, very important command. You find that application, students are answering, you find they say explain, student will just start listing. You lose out. So please, like you are going to see here, what is the command here? Discuss. Then you start listing. They know the reporting entity. Are you the lessor? Are you a lessee? Are you a customer? Are you a reporting entity? They know there are variable marks to guide you. Normally, if it's computation, it's half mark. A theory for a valid point is 1 mark. So if it's 5 marks, I don't see a reason you writing 3 pages. It means you are mismanaging time. Okay, so when you come to this question, what's the requirement? They're saying, discuss how the above transaction should be treated in the consolidated financial position of farmer. Farmer was a parent here. So remember what we discussed here. You may have a parent here, a parent company. Then you have got a subsidiary where you have got control. Then you may have an associate. So when you say separately, all these companies, each company is going to prepare its own financial statement. Now, when you say consolidated, is now when you consolidate here. So the question they are asking us, not in the individual, not in the books of the parent subsidiary, but in the consolidated. So they are saying, discuss how the above transaction will be treated in the consolidated statement of financial position of this company. So we come here. Farmers Nest, in short, this was a parent company, is in the process of accounting for the acquisition of another subsidiary, OP. So in short, Nest was a parent company. Then they were about to acquire a subsidiary. What's the name of the subsidiary? OP. And has identified a number of issues when reviewing the fair value of OP's asset. Because according to IFRS 3, business combination, when you buy a parent buys a subsidiary, you have to measure the asset and liability at fair value. One of the issues related to a legal suit by one of OP's customer for allegedly supplying a fault goods, and the customer is claiming damages amounting to 8 million. OP legal team has advised that based on the precedents, it is very unlikely that the court will award damages to the customer. So there are 2 companies here. There is a parent, then a subsidiary OP, then OP was sued by the customer. Now, when they consulted the lawyers, in the books of subsidiary Hope here, Hope is a subsidiary here, then they said, we are not likely the customer to be succeed. Then what are they saying? The fair value of a contingent liability in respect of claim has been assessed by directors of F to be 2.2 based on a very low probability that the customer succeed. Hope has correctly applied IS 27. So in the books of Hope, they have used IS 27, which is on provision, contingent liability, and contingent asset in the separate. By treating suit as a contingent liability in the individual separate, we simply disclose in the notes. Okay. So that's a scenario. So what we are saying here, when you be preparing consolidated financial statement, what should happen in respect of 2.2? Should we disclose or do we need to recognize it? So I appreciate if there's someone who can unmute and you contribute. Want to make it more interactive, and I'll guide you how you can lose marks. So I want someone who can attempt, if it's possible, you unmute, then you contribute. I'm sure you have anyone who can comment on this one. Discuss how the above transaction to be treated in consolidated financial statement. Any comment? Are we there? Anyone who can comment? Mr. Katungu said it's an interaction. Can someone try to comment on this one? Okay, you have protested? Even in the exam, we'll be waiting for Musonda to say, now start answering. Yes.
Good afternoon,
Yes.
sir.
Afternoon, madam.
Am I audible?
Yes, we are very audible.
Okay. So we will first begin by defining what a contingent liability is in accordance. Since this is a consolidation, we'll not choose IS 37. We'll apply IFRS 3, if I'm not mistaken. So that's the one that we'll use when consolidating. So this one states that we have to recognize the contingent liability despite as long as it can be reliably measured. So like in this case, it is reliably measured, so it has to be recognized. So the provision that has been made, we have to recognize it. First, we have to adjust it, show the fair value movement from 0 to 2.2. So this is provision that needs to be made. So that's the one that we're going to take to profit and loss. And then we'll see if there's any accumulation. And that's the one that we'll take to the financial position. Thank you.
Thank you very much, Madam Paromiti. That's the answer. So what was tested here, in the books of OP, the subsidiary, then they used IS 37, which is provision contingent liability, contingent asset. And the guidance here, contingent liability, you simply disclose. But when you are preparing consolidated, we are using IFRS 3. And the requirement of IFRS 3, forget about probable possible, as long as the fair value can be determined. So in this case, we are going to move from 0 to 2.2. So in this case, they were supposed to recognize this one because we are tested here in the consolidated. So like what Honorable has indicated, IFRS 3 and also the issue of 37. That's what they were looking for. These slides will be sharing with you, also you can check. Okay, that's what was tested here. IFRS 3, what is only important is if the fair value can be determined. So you need to recognize this liability. So when you be computing goodwill, you have to reduce the net asset. Then you show it as a liability. Then at a reporting, see if it's the same thing which was at acquisition and at a reporting date. So this is what was tested there. These answers will go through afterward. I wanted just us to discuss. You can see. This one came last sitting for March, CA2.1. It was question 4A. What was the requirement here? Required. Identify and explain 4 advantages of ratio analysis as a means of assessing the financial performance of the business. Now, what have you been commanded? That's how we use the math. They have said identify. They haven't put and they explain. When you identify, then explain for advantage. Now, since we are got limited time, I want someone who can just give us one, who can try to identify and explain the advantage, because this is application, not knowledge level. Who can comment? We are discussing, and when you are free, you unmute, then you discuss. We are discussing, it's an interaction. Sharing is caring. Anyone to attempt? So you should have made the chief examiner's report that got 0 because we have failed to answer. Who can answer? Who can give us one here? Who can try to attempt? Who can identify one and explain?
It enables comparability between financial statements of companies, between companies in the same industry, or between 1 year and the previous year. So we are able to note if the performance of the company, if it's improving or if it's not improving.
Okay, I'm sure the secretary are taking note. Those who are participating, when you go to Zika, they will give you a pen. Just go and ask for Mr. Katungu. So, Madam Maparomiti, so far you have answered the 2. So when you go to Zika, just go and see Mr. Katungu. There will give you at least something. That's the answer. So one way it will brings about comparability. When you compare, then you'll be able to see if there's improvement, duration, or it's the same. And how can you compare? You can compare over the period of time. You compare last year and this year, or you can compare 2 companies, like compare Zamtel and MTN, or in the sector. And also we are going to see it also helps in terms of planning, like based on the liquidity challenges we are having, or based on investors ratio, or the issue of solvency. Should we go and issue shares, or should we get the loan? So that's what we are looking for. So it brings about comparison. And when you compare, then you have to see if there's improvement. Also, industry analysis, you can see, for instance, those who are in training sector, how are they performing? Because they can give you 2 sectors. Also, when you are valuing the business in terms of share, then planning and performance. Then also it simplifies because we try to simplify the figures. So that was the answer they were looking for. Then you go to this one came in what? In CA2.1 March 2026, it was 1C. They're saying for Paya, in short, this was a parent company acquired 10% of ownership in an related company. So in short, this company bought 90% on a related company. Required. Explain the necessary accounting treatment for this investment in P in the individual financial statement according to the following classification. So the meaning here, the company acquired 10% in another company. Now, in the separate, not consolidated, separate, just in the books of the one who was acquired, they want to know how are we going to account for this one, assuming we are using fair value through profit or loss, or we are using fair value through other comprehensive income. Fair value through other comprehensive income. So if you check here, we talk about profit or loss 3 marks, then OCI 3 marks, the total 6 marks. This was part of consolidation. So I've given you a clue. If you expect that there will be everything computation, that will not be the issue. So take note of that. Okay. Okay, come through. We are interacting. We are just interacting.
Good afternoon, Honorable Msonda.
Yes, Honorable Tisha.
I would love to give it a try, sir.
Yes.
Okay, so according to IFRS 9 financial instruments, fair value through profit or loss, the investment should initially be recognized at fair value. Subsequent changes in fair value are recognized in the profit or loss, and dividend income received is also recognized in the profit or loss. Then fair value through other comprehensive income, the investment should initially be recognized at fair value. Subsequently, Changes in the fair value are recognized in other comprehensive income, OCI, and dividend income is recognized in the profit or loss, while gains and losses on disposals are not recyclable. So we take them to the P&L. I submit, sir.
Thank you very much. I agree. You are going to see this was on question 1, but they did not test on the consolidation here. It was the IFRS 9. So if you have got a financial asset, you are measuring at fair value through profit or loss. If there will be changes, gain or losses, you take to profit or loss. But here, you take to OCI. Then dividend received, whether it's a profit or loss or OCI, you take to income statement. The other thing they wanted to talk about is transaction cost. When you classify their asset under profit or loss, transaction costs, we expense. So transaction costs are expensed. So the transaction costs are expensed, but under OCI, transaction costs are capitalized. When say capitalized, you add to the initial value. You are a powerful team. That's what was tested here. How many marks? 6 marks. Then someone says, Zika, no, they want to give us 0. So that's what was tested. If there will be a gain or loss, we take to profit or loss. Then transaction costs are expensed. Then dividend received, we take to income statement. But when we go to OCI, if there will be a gain or loss, we take to other comprehensive income. But dividend received, you take to income statement. Then the transaction cost will be added. Here we expensed, here added. Then dividend income statement. That's what we are looking for. 6 marks. I'm sure you can see that we are passing. That's a message. Okay. We go to September 2025. That was question 5. Okay. We come here. What was the question here? When you come here, they're saying directors of HPLC are preparing financial statement for the year ended December 2024. That's when they are preparing. Or before that, we said start with the requirement. The requirement is advise. They haven't said only the computing. Say advise the directors of H how to addressing their concern. So they want to say how to address their concern from the directors. So when you come here, they are saying directors of H are preparing financial statement for the year ended December, and there were a number of concerns. So the first one was on the 1st January, okay. So when you come here saying on 1st January 2023, remember we are preparing December 2024, but on 1st January 2023, H delivered equipment to a customer as a sale of a trading inventory. In addition, also agreed to provide the services. So they delivered the equipment to a customer. Then in addition, they also indicate that they are going to be servicing the equipment. So they'll be servicing the equipment. They'll be servicing for equipment for what? For 3 years. That's what they agreed. Okay, bring your vehicle or bring your printer, then also be servicing for 3 years. Commencing on what? On 1st January 2023. And yes. Then servicing of this type of the equipment normally invoiced at 0.6. When you are servicing normally, they invoiced 0.6. Ensure they charge by 0.6 normally. Then ignore the discounting. Then they are saying us, H reported the entire amount. So in short, H received, the total amount H received was 2.5. Why did they receive 2.5? Because of the equipment and the servicing. Then in this 2.5, there was 0.6 for servicing. So it means the equipment, if it's 2, it means someone will do 2.5 minus 0.6 there. Okay, that's what they have advised us there. That's what they have advised us there. Okay. So when you come here now, what are they telling us? They recognize the entire 0.6 in the year ended December. Now, the directors of H have realized that the transaction was not properly accounted for according to IFRS 15. When did they realize? In 2024. So to summarize, in 2023, H sold equipment and they were providing services and they charged 2.5. Then they recognize the entire amount in 2023. Now, we realize in 2024, no, I think that was a wrong treatment in 2023, but we are in 2024. Then they have therefore asked advice on how to apply IAS 80 so that we correct that error. So in short, let's advise here. What was wrong, the way that it was treated? If it was wrong, how should we correct an error? They say account the only profession who can make an error and you correct an error. Some profession, you are jailed or you will die. Who can comment on this one? What error was there and how can you correct this error? Mr. Katungu is taking note of those who are participating, and when you visit the institute, you'll be awarded. So far, we have got two ladies, or first ladies, gentlemen. I'm sure they are still interceding for us. Who can come through? Who can attempt? Okay, for the sake of time. For the sake of time, what was
Can
this?
you give it a try, sir?
Yes, madam, can give it a try.
I feel like this was a prior period error under IAS 8, accounting policies, change in accounting estimates and errors. And I feel like the directors should restate the 2023 financial statements, reducing revenue recognized in 2023 and recognize deferred income or liability for the unearned revenue.
Okay, thank you very much, Honorable Tisha. So far, Honorable Tisha, 2 answers. Honorable Maparoso, 2 answers. I'm still waiting to hear a voice from the gentleman. So that's the answer. So what was tested here? According to IFRS 15, you can't recognize revenue for the services or for the work you have not yet done. So what were they supposed to do here? They were supposed to defer. When you say defer, show it as a liability, then you recognize in the future. So since 0.6 was for 3 years, what was only supposed to be recognized is 0.3 divided by 3. They were only supposed to recognize 0.2. 0.6 was supposed to be deferred income. When you say deferred income, show it as a liability. Clement, you're not on a mute. So you show 0.4 as a liability. So now what they did was wrong because they recognized the entire 0.6 for what they have not yet ended. So when you say prior period, we are in 2024, then we realize what was done in 2023. That's why now we have to reinstate it retrospectively. So we are going to debit the retained earning by 0.4 and also credit the deferred income. Then also the revenue for previous year will be adjusted. So what was tested here is IFRS 15 and also IAS 8. As I've indicated, you can go through after at your own time there. Okay. Okay, briefly, we need to manage time so that I can give you time so that you can ask questions. They say, explain the accounting treatment of leases in the books of LSA. Now, IFRS 16, it's a highly examined, it's an entertainment area. So if it will come, you have to know, are you in the books of LSA or are you in the books of LSC? In the books of LSA, the LSA is the legal owner who is going to transfer. So the way we account for the leases in the books of LSA, you have to know, is it an operating lease? Is it an operating what? A lease? Or is it a finance lease? Finance lease where substantial risk and rewards have been transferred. So if it's a finance lease, we recognize the asset and we account for lease receivable. If it's an operating lease where substantial risk and rewards have not been transferred, then the asset will continue appearing in the books. Then you account for the rental income on a straight line. Now, in the books of LSC, there is no operating lease and finance lease. What will happen? Recognize a right of using the asset and also recognize a lease liability. So be careful in the exam. Are they going to bring in the books of LSA where there's operating lease and finance lease, or is it in the books of LSC, the one was obtain a right of use? So you can go through that one. Okay. I'm trying to manage time so that I can give you the what? Time to ask questions. So if you check, if this was a marking key, where you just say, accounting treatment will depend whether it's a finance lease or operating lease. You have got 1 mark. Then you identify the two. What's a finance lease, operating lease? 1 mark. Then define what's a finance lease? 1 mark. How do we account for operating lease? 2 marks. Finance lease? 1.5. Total 6 marks. So if you simply go to accounting without telling the reason, the background, you get 2 marks. So this just to guide you. Okay, this is what was the exam. What was there. This came in D8, September 2025. Also, this was question 4, number 16. As part of the reorganization of the operation, there would be a redundancy to be paid of 80, and the remaining employee will be retained for 25. So there will be a reorganization or restructuring. Then those whom we separate with pay redundancy of 80. Then those who remain, we'll pay them with training, we'll pay training, retrain them. We have to retrain them. Maybe we are using a manual, now we will be computerized. Required. Explain how their matters above will be treated in a financial statement in the respect of reorganization and also training in accordance with IS 37. Who can comment briefly to manage time so that I can give you time to ask questions? Who can comment here? For the sake of time?
Sir,
Yes.
can I try?
Yes,
Yes.
Madam Paro
In
3, Madam
accordance
Patricia
with
2. Mhm. Yes.
You're not giving scores. Okay, in accordance with IS 37, provisions, contingent liability, and contingent assets, reorganization costs are allowed to be capitalized, while costs of retraining employees should be expensed. They should not be capitalized. So in this case, this is because the training of employees is happening after. Wow, and it's not an obligation, but the redundant payments is an obligation since they have to pay the employees whether they like it or not. Thank you.
Thank you very much. You can see how the Honorable has answered. Say, according with IS 37, then you put a name provision, contingent liability, and contingent asset. So you're supposed to define a provision. Provision is a liability of one certain timing or amount. And you can only make a provision one if it's probable there will be outflow, the amount can be measured reliably, and there should be present obligation. Now, when you come to the organization, we can only provide for the organization one, where you have come up with a detailed plan, and also you have communicated or you have implemented. Then when you are providing, only to provide for directly attributable cost. These other costs should not be provided for. So like in this case, what was supposed to be provided for is 80,000. Those we have retrenched, you have to pay them. So we expense and show it as a liability. But for retraining costs, when you come to retraining cost, remember, you are training those who have remained, so those will be only the non of providing, but will be accounting for them as will be expensing. That was IS 37 there. So you can go ISC 37. Conceptual framework, for the sake of time, we talked about the purpose and also explain the non-monetary item and non-monetary item. Monetary item, we refer to the units of the currency held, or if it's an asset, the amount to be received is fixed or can be determined, like receivable loan from point of view as a bank. Then if it's a liability, amount to be paid is fixed or determined. Non-monetary are those which are not monetary item, where the amount to be received or paid is not fixed or determined, like a vehicle inventory. That was IS 21. So this is, you go through the answers when you find time. Non-monetary, you go through also there when you find time. Okay. Now, this one, I'll talk about the issue of here they're saying required show an extract for goodwill, equity changes, and share premium. Okay. Now, I'll focus on goodwill. The exam you are going to write, you are likely to come across goodwill. Okay. So, not good, but goodwill. So, what's the format? We are almost there. You put the currency, if it's in thousand, if it's kwacha, then if it's thousand, like in this case, we assume they're in thousand. So what is the format for goodwill? Normally we start with consideration. So when we say consideration is what you are going to pay. Now, what I always recommend, you leave about 3 lines because you may have deferred consideration, share exchange, contingent liability. So leave about 3 lines. After consideration, then you bring non-controlling interest. Now, take note, I'll talk about there are 2 methods. After that, then you say less fair value of subsidiaries identifiable net assets. Now, when you say net assets, same as equity. So what are you supposed to do? You bring like share capital, which was there. Then if there will be retained earning, which was there then maybe there was a share premium, we'll discuss. Then you bring what we call now fair value adjustment. When I do the exam you are going to write, you are likely to come across the fair value. Okay. Then you have got a goodwill there. So let's try to go through the question here. So when you go to this question, what have they told us? We are trying to go through this question. So they have told us that on 1st April 2010, M acquired 80% of equity shares in K. So in financial reporting, once you buy above 50%, it's a subsidiary. So they are simply telling us the parent acquired what? They had acquired 80%. So since they had acquired 80%, that means it's a subsidiary. It means we cross the accounting but we have to compute goodwill. Okay. In Kachenjera. Then the equity shares of 1 kwacha each. So the nominal value was 1 kwacha. Then Kachenjera has 300. Sorry for that. Mutondo is a parent. So we'll talk about maybe just a moment just for the sake of presentation. We have got Mutondo. So Mutondo in this case, in short, is the parent. Then they acquired the shares in what? Acquired shares in Kachere. I don't know what the meaning of Kachere. So Kachere, we're going to see in this case is a subsidiary. Okay, yeah. So Kachere is a subsidiary. So what have they told us? The nominal value of shares is 1 kwacha. So the nominal value was 1 kwacha. Then for Mutondo and Kachenjere, the shares were 300 and 270 respectively. So the meaning in Mutondo, there were how many shares? There were 300 shares because the nominal value was 1 kwacha. Then in Kachere, the shares were 270. Okay, so 200 and sorry for that. 200 and what? 270. These were the shares which they had acquired. Okay. Then we go for a cash consideration of 144. So when you come to goodwill here, in terms of consideration, first they paid cash. So since they paid cash, they debited they credited cash at bank and they debited credited cash at bank, then debited cost of investment. Since our workings are in 1,000 here, you simply write how much we paid just a moment here. They paid the cash of 144. So you just write 144. Then in addition to 144, there will be also share exchange. Share exchange. When you say share exchange, you buy shares, then you give them also the shares as part of the consideration. So there were 2 forms of consideration. Share exchange. Of what? Of 1 share for every 2 shares held. So we need to interpret here. They are going to issue 1 share. They will give out 1 share for every 2 shares what? For every two shares acquired. So the meaning, if you are going to buy 2 shares, you give them 1 share. That's the interpretation here. If you are going to give them 1 share, if you acquired how many shares? 2 shares. Then they're telling us when the retained earning of Kachenjera was 110. So when you come here at the date of acquisition here, the retained earning was how much? The retained earning was 110, their workings. Then the share capital you get for the subsidiary, which is 270 like that. Okay, that's what they're telling us here. Then they're telling the market price per share in Mutondo was 2 kwacha. Okay. The market price was 2 kwacha. Now, this was friendly, but I'll comment here. So the market price per share. The market price per share was how much? Okay, I need to manage time. It was 2 kwacha in Mutondo. Okay. Then we'll continue there. Then additional information. Okay. So what I'm interested here is to come up with the shares. There are shares acquired. How many shares did they acquire? They acquired how many shares? They acquired 80% of how many shares? Of 270. Those are the shares they acquired. So they acquired 260. Now, how many shares are they going to issue in total? Because when we want to come to the cost of investment, we use the shares what? Issued. So how many shares will be issued? You multiply 1 times 216, then you divide by 2. So we have got 1080. So 1080, we are going to see, we are referring to the what? The shares which they have going to issue. So what's the message here? There is the shares acquired and the shares which are going to be issued. Okay. 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 So what are we discussing? They have issued shares, then they have acquired shares, then also they are going to issue shares. Now, when you come to share exchange here, you value the shares they are going to issue, what they are going to give out. So how many shares are they going to issue? 1080. Then use the market price of the parent. Here it was friendly. Why? There was only one share capital in the parent. So if they give a subtract, you get for the parent. So what was it? 2. So in terms of the share exchange was 216. So if it's a double entry, nominal value, 1 times the number of shares will go to the share capital, then the excess will go to the share premium. Then when you continue here, okay, that's about on top there. Then they're telling us when you come here, a non-depreciable land with the carrying amount of 250 at the fair value of 260. So it means we need to bring the fair value what? Adjustment. So when you come to fair value adjustment here, there was you compare 250 and 60, there was 10. So you write 10 there. Then the plant with the carrying amount of 150 at the fair value of what? 150 at the fair value of 155. So again, there will be fair value adjustment of how much here? There will be adjustment of 5. Okay. Then when you continue, then they're telling us here, at the date of acquisition, Kachenjera had an internal generated brand name. The directors of Mundo had a fair value of 20. So this one was not recorded, but as we are going to record in terms of the brand. So what will happen in this case? You are going to bring the brand also. What's the fair value adjustment? 20, because we are moving from 0 to 20. Then they're telling us the fair value of non-controlling interest was 108. So how are they valuing NCI? They are using fair value. Okay? So when you say fair value, the goodwill we are about to compute is for both the parent and NCI. How much? 108. So when you compute goodwill, what will happen? You are going to say cash 144, then share exchange 216, then NCI 208. Then at the time we acquired the company, the share capital was 270, then plus 110. This was a carrying amount. So what are we supposed to do? We add the adjustment. So we say now 280 plus 10 plus also 10, then plus 20. What are we having? 415. So what are we going to do now? We'll say first the 8 minus 415. So this was the goodwill. Since we valued NCI using fair value, this goodwill is for both who? Parent and the non-controlling interest. That's a message there. Now, since we are divided, if it was a proportionate, if they will say in the exam, use a proportionate, what are we supposed to do? You get a percentage of NCI 20% times the fair value of 315. Then you use the 83. Then it means the goodwill we are going to compute will be only for the parent company. So ensure you revise in terms of the questions. Okay, you go through this. Then there was IS10, adjusting and non-adjusting event, which you can try to go through those. Yes, then in conclusion, sorry we have taken time, we started late, but there will be an opportunity. You are reminded for every entry, you'll be given half mark. So ensure that you capitalize in terms of entry. Then if you make a wrong conclusion, we use a follow-through principle. You will get some marks. So ensure to keep on writing and justifying. As we are preparing for exam, ensure to cover the entire syllabus. Then please not specialize on some topics. You are not the examiner, you regret. Then ensure that you go through the technical standards and which are highly examined. For totals and balancing, they don't give you marks in the exam. You know, it's about passing, not balancing. So capitalize with enter as many correct entries as possible. Take note of that. Then ensure to write the workings. No need of just bring the total. You compute on a calculator, otherwise you miss out. Then please, let's not rush otherwise you'll crash. You can't, personally, you can't study FR for 3 months, unless maybe you are not working and you have got no other related parties. So let's not be rushing, otherwise we'll be crashing. Then the next point also, let's know how we can manage time. So in terms of presentation, we are hoping this has helped. Of course, we can interact. We had a limited time. Then I wish to encourage you, be positive and do your part. Aim to pass, not to fail. If you say, I'll fail, Zika, I want to fundraise, you fail. So tell yourself, enough is enough. After listening to this presentation, continue studying, go through these notes, will be shared with you. Then looking forward that you'll pass. I know we have taken, we are past 17, but I don't know, I'll take to Mr. Katungu, maybe if he will allow, maybe 2 or 3 to ask some questions.
Thank
Mr.
you,
Katungu.
Mr. Msonda, for the wonderful presentation. Colleagues, do you have questions for Mr. Msonda? We can take some questions for some 10 minutes. If he will give us more time, perhaps maybe we can take it up to 20 max. Thank you.
I would like to ask a question.
Yes, we can go ahead.
Do you recommend during showing workings where double entries are applicable? Is it a waste of exam time, or we can just go ahead and show some double workings when even if the examiner hasn't asked that? Because we find that some questions, even when answering, you'll find that, okay, I can include some double entries here just to show.
Okay, thank you very much. Okay, so what we recommend in terms of, yes, most of this one will happen like in terms of published or company accounts where you find maybe there's a liberation gain. So normally, if it's published, we'll mark you, for instance, you take immediate to the asset, you go and debit, you add, and you credit OCI. Unless mostly section B, they will say also explain the double entry or the journal. Then talk about a debit or credit. You say you have to debit this account, you have to get this account. But most for publish, just know if you go and add it to the asset, I know that you debited. If you go and increase OCI, I know you credited. So they are not necessarily that you have to take debit asset, credit OCI. They are just go and add, you will know there. But most of it's a section B, where they will ask you maybe to write, when you say journal, they want to tell us the double entry. Because remember, we are accountant, our language is debit, credit, not add or subtract. But for published or company, even in consolidation, we can mark you. You get the full marks. Hope I've responded.
Yes, you have. Thank
you. Okay. Another question? You have been given an opportunity. Ask where you're not clear. Hope I haven't confused someone. When you are quiet, there are 2 messages. Either it's very clear or you have been confused. So do you have another question? You have begun about 10 minutes. We may not see your hand. You simply unmute and ask. Any question?
Yes, I would like to ask another one. I've seen that there are no meetings for CA3.1 whenever you have answering technique meeting. So is this information relevant also for 3.1?
Okay, very interesting question. So the question here, the examination techniques is we have covered D8 and CA2.1. So is this beneficial also for CA3.1? Like what Mr. Katungu indicated, when they are deciding which topics or which subject, I mean, they are going to learn examination text. They look at the pass rate. So here the challenge here, it's a concern if you can see the way they have seen here. That's why they picked this. Now, what we have discussed is also relevant. Like the way share exchange, it will be there. Goodwill, it will be there. You know, when you come to CA 3.1 is when you come now, it's advisory level. Maybe the command which will be used. So in short, what we have gone through, I can assure, even if you're writing CA3.1, you have benefited because there will be issue of one realized profit. The way we compute, it's the same way. The format for goodwill, it's the same way. The only difference like cash flow they want to bring for a single company, they'll bring for the group. Even the statement of changes in equity, it will be for the group. So the information is relevant. Okay. Another clarification or comment? Okay. Mr. Katungu, it seems there are no further comments or question or clarification.
All right. Thank you. If there are no further questions or clarifications, we end it here for the day. Special thanks for everyone that has made time for this meeting. We hope that you have learned a thing or two out of it. To ensure that you get as much as possible out of what has been presented, we are going to share the recording as well as the presentation so that you can listen to the presentation as well as read what Mr. Msonda prepared. And then once more, for those that have other papers such as management accounting or auditing, please do remember that we still have more meetings that are coming. Otherwise, thank you so much. These will be shared by email, just in case you are wondering how we shall share the presentations as well as the recording. Thank you so much.
Thank you very much. Wishing everyone all the best.
Thank you.
Thank you.